US stock markets across the board continue to trade within tight trading ranges, which is fueling a plethora of uncertainty across the board from institutions to retail investors. Today's video, let's do an update of where we currently sit within this major cycle that has shown over 12 times in recent history of the last 60 years to show a positive result in this year. On the back of all the uncertainty through the economy and rising interest rates expected throughout 2023, is this cycle maintaining its trend? Let's take a look at that in today's video. Make sure you've liked and subscribed to the channel. It's your home of macro cycle analysis across stock markets, crypto, and the biggest of them all, real estate. We cover all financial markets as it's important to understand what is happening throughout the world, the economy, real estate, stocks, to give us a broad, holistic picture of what is going on in the market. And if you want further updates, check out the link in the top of the video description, our free crypto and economic report. Stick around to the end of the video as I've got an extra super special cycle to share with you. But first up, let's start with what's going on out in the market. And we're continuing to follow up on the market sentiment. In this case, we're looking at recession fears are down sharply. Now, we've been following this for many months and there has been no change to this indicator. We've fallen from November 2022 and continue to fall as we currently sit here in March, which the reading was from February. This is a survey covering 300 fund managers with $750 billion under management. So we're seeing the fears of recession drop. Now, it's still in the positive. There's still many saying that there is the likely chance of a recession, but those fears seem to have peaked, just like they did in April 2020, which was very close to the bottom, being the bottom in March 2020, and then again in March 2009, which was the stock market bottom. Now, in slight contrast to that view of recession, the same surveys are looking at this potential rally as being a bear market rally rather than a new bull market. In terms of the percentages, we're still closer to 70% of the fund managers saying that this is a bear market rally, not a bull market, not a new bull market. And what we've seen in the past, though, is when the figures get so far in the opposite, meaning there are a lot of people believing it's a bear market rally, it tends to be the end. Now, that is just what we see in the past. Basically, when the majority of people are flipping on one side, it's usually the end. Take the previous chart we just looked at. This is March 2009, saying that this was the period that a recession was most likely. 80% were saying a recession was most likely. It was already over. The bottom was in. Markets are ready to move up. April 2020, saying a recession was most likely. Extreme fears. Bottom was in. Markets moving up. Could this be the same sort of thing? I happen to think so. That's my opinion. Let's stick to the objective data on the charts. The search term recession is also falling across the globe. Past 5 years worldwide, the peak times were in June 2022, which was the bottom before the current bottom in October. And the next time was July, followed by October, when the bottom actually occurred, or the current bottom that is. And then again, November, and the next peak time was in mid-January. So the search term is getting less searched. Maybe people are figuring out what a recession is. Maybe they're just getting sick of hearing about it, and this is the only thing the media is able to continue to push our way. Nonetheless, let's stick to some of the objective data on the charts. This is something I just posted on Twitter. If you do want to follow us, Twitter, Instagram, links are in the video description. Make sure you don't get scammed out there. So use my official links in that video description. This is the French stock market. Don't go anywhere. It's not about baguettes, brie, and beautiful steaks. This is hitting new all-time highs. 2022, it hit some all-time highs here. Well, this is the previous all-time high. Now we're hitting new all-time highs again. This line down here, the yellow line, that was the previous all-time high of 2000. So we're now hitting new all-time high prices. Granted, the argument could be said that maybe this market is going to roll over and test some lower prices. Maybe it comes all the way back down and tests those lows that were set in September and October, like in other markets. But nonetheless, this is hitting new all-time highs. It's not something that we expect to see throughout the world if the world is going into recessions. Another interesting point to note about the interest rate rises is that within approximately 12 months, they will potentially come back to similar levels where we currently are. We're at 4.5. The market is pricing in rises up to 5.5, 5.75. But from March 2023 to March 2024, there is a likelihood that we may sit somewhere around 4.75% to 5.25%, which is only 2 to 3 rate rises above where we currently sit. And the following months could come right back to where we currently are. All the way in July of 2024, we could see the interest rate all the way back to the current levels, potentially even lower. Now, the next fear point was the Fed pivoting and this leading the market to an absolute collapse. Now, in yesterday's video, I pointed out that it has been seen many times in history that a pivot doesn't necessarily lead to a crash. If you didn't check it out, I'll leave a link to it at the end of this video, so stick around for that. But that's not the surprise. What we're looking at today is the presidential cycle and looking at the gains in the market throughout the third year, which is exactly the year that we are currently in. Some of these gains are astronomical, and unfortunately for many who are in positions of fear in the market, they may miss out on this. So let's look at some of the indicators and price ranges that we need to get to in order for the market to turn even more bullish. First up, it is the 4,200 point level. This is our key 50% level. And for many technical analysts out there, they are watching this 4,200 level. You can see many times we've rejected off this. And so this can be one of those first indicators that you want to look out for. If the market breaks above this level, that is going to be a good sign that we are going to continue bullish in 2023, at least maybe close out the year and continue up into 2024. But let's continue just with the shorter term outlook. So far within this cycle, going from the beginning of the year to now, it can be spliced up many different ways to get this data. But one way that we look at it is just those calendar years of the third year of the cycle, which is right now, because next year in 2024 is the election year. So far we're up approximately 5% in the year already. Some of the other ways to splice up this data is to use the year, or approximately 18 months from October in the year prior to the third year all the way through to the election year in April. And that is essentially that 12 months plus a couple of months either side, seeing as the election is in November of the fourth year. So we're just going to use the calendar year in this case, but nonetheless, whichever way it is spliced up, as this data shows over many years, some of the data going all the way back to the 1800s, 1830 here, the third year can be up somewhere on average about 13%. So we're currently sitting about 5%. We're getting close to halfway within those gains. This is almost turning out to be way too bullish, because if we take it back to that October period that some of the data looks at for these cycles, we're up 12.5%. Knowing that the average is approximately 13% for the pre-election year, it's basically had all of the gains for that year, which means we'll probably sit somewhere around here or continue to go up from that point. Nonetheless, I want to take the bullishness out of it and just go with the calendar year itself, showing that we're around 5%. So what we're going to do is go back and just check out the previous pre-election years, basically the third year in the presidential cycle, looking at, in this case, 2019. Market was up 28%. Now, pay particular attention here to the year prior to the pre-election year, meaning the second year, and seeing as you can see that this one here was down. What some of the data also shows is that if the year prior to the pre-election year, so the anyway, the second year, if it was down, you're going to have better returns in that third year. So we were down last year. It's possible that we should see better returns this year, better than the average, better than the 13%, which some of the averages show. You've got a 13% in this case. You've also got a 10.5% in this case. So somewhere in those double-digit returns. Going back to 2019, great returns, 28% calendar year. The year prior, at least those few months leading into it, was a dump. And if we go through it the entire year of 2018, it was a sideways year, which led to a nice boom year that followed that point there. Going back to 2015, an interesting one here. We were pushing to new highs and pushing up and up and up and up. 2015 was absolutely flat, basically 0.5% down for the third year in the cycle. So this starts to balance out those averages. One time it was 0, the other time was 28. Get a nice average there, there's 14%. But nonetheless, the market was going up prior to this flat year, and then the market continued to go up. We've seen a down year. Typically, after those down years, we get a nice move to the upside. Let's go back again. 2011 was basically flat, almost dead on 0 here. The year prior, was down and then up before the year started, getting to new fresh highs within that 2011. So that 2011 ended up being flat, but nonetheless, the market continued up from that point. Now we go flat again. So this is not looking great if you're only just tuning in for the last 14, 16 years or so. But wait to see some of the great data after a market has hit a bottom. So we're looking here now at 2007. You can see 2006 was up. This was leading into a new high, going back to a double top with the previous top here. This also was pretty much flat in that year leading up to the pre-election. Now we have to go all the way back to 2003 before the 2004 election. This was almost dead on what has happened in 2022. We had a down year in 2022. We had a nice bottom in around June and July. We had another beautiful bottom in October, almost dead on to the day 20 years earlier. And now we're focusing on, or looking forward to March 2023. So basically exactly 20 years ago, it had another bottom, which was a higher low. Looking at that entire year of 2003, market was up 22% for that pre-election year. Let's go back again. We had 2000, leading into the 2000 election, 1999. There was a bottom. Very similar case here in 1998. You can see a low came in August. We had that low in June and July. Then we had another low here that was for 2022. But in case of 1998, there's August. Then we had another low in October. We had another low in 2022. Market moves up from that point. And then we see another good move to the upside here in that pre-election year of nearly 20%. Of course, the election year was a top. Market fell over at that point, which is really interesting to note for the special cycle information I want to share with you after we go through these cycles themselves. Going back here, 1995, we're up 34% for that year after a flat year the prior year. Go back to 1991, we had another nice up year after basically a flat time through 1980 and 1990, followed by a dip into, you guessed the month, October. Got a nice higher low forming here in January, which so far has been a pretty reasonable low in 2023. Market runs up from that point in 1991. Let's go back to the Black Monday dump for the stock market. This is 1987. Very severe time, very severe crash. The market was flat throughout that year. If you go from the January to the December date, it was flat. After such a spectacular dump, it still ended flat. This was an extremely scary time, probably similar to the COVID pandemic crash because it was so fast, so quick, and so far down. Yet the market remained flat when you just look at it from calendar year to calendar year in that pre-election year. Going back to 1983, because the election was in 1984, we had an up year, 17%. And prior to that, in 1982, which was 40 years prior to 2022, we had some nice dumps here into August, some higher lows into October, and then the market started to move away for that rest of the year. So nice cycle analysis there. 1979 leading into 1980, another positive time to the upside, another positive move there. You can see some lows came in 1978 in October and November, and again in December. So some pretty good times for lows to be forming in the market. Some severe moves to the downside, and the market was up 10.8%. Let's go back again. 1975. Look at 74. It had a low in October. You can see that they're late September, but this is a weekly chart. Another low. Look at it again in December. Another low, similar to what we've currently seen. And the market heading up. 28% in that case after a pretty severe sell-off from around 120 points down here. I believe it was into the 60-point area. So a 50% drop there. Market moved up pretty quickly. Timing of those lows pretty similar to what we've seen in 2022. 1971, we go back again. We had about an 11% move after the market dumped into 1970. You can see here was a May, June lows again. There's July, there's August. You've got November lows, and then the market moves from that point. Back again, 1967. We have lows in October. It's almost an exact repeat over and over again. There's August. We had the lows in June, July. Next low came in October. Next low here in December's. And then the market moves away for 20% that following year. Let's go back again. We look back here, 1963. This is a 62 dump. You can see it dumped into June. Similar to what happened in 2022. We had a dump into June, so a 60-year cycle. The next dump, can you believe it, happened in October. We had a dump into October of 2022, 60-year cycle again. 1963, so 60 years ago, market ran up nearly 20%. But of course, I hear you at the other end. Times are different. This time is different. Things are changed. We don't have money printing. We have fears of recession. We have fears of everything else going on in the world. These times are much different. We had inflation, the interest rate rises, etc., etc. You can't compare everything to the past. That has been said throughout history. So rather than me give you more of my opinion, just take the data for what it is, what we have looked at here. Over 60 years of data throughout these markets with pretty similar low points throughout the previous year of 2022. You can see here we had those dumps into May, dump into June, another little low here in July, followed by a peak in August, a dump into October, some higher lows so far, unconfirmed, but so far we got a higher low here in December. And now we wait to see what happens, whether we can get past 4,200 points. This is just the data speaking. It's not my opinion. I've sprinkled tiny bits of opinion throughout, and I give you plenty of that over on Twitter. But just keeping to the data, it is basically saying that we should rhyme with history. There's a fair amount of research done for these videos. So if you do want to support the channel, hit that like button, subscribe, bell notification icon, and of course, top of the video description, there is more free content here, crypto and economic reports across crypto, stock markets, and real estate. Our TIA members get a first-hand look at how this data comes together and how you can use it for your own portfolios. So if you want to get involved in that, link is in the top of the video description as well. Now for the surprise cycle, which I'll do more on in future videos, but just to give you an understanding of whether we could be experiencing a flat year, potentially a dump back to the flat point like we've seen throughout 2007, 2011, 2015, or maybe we're experiencing the 2019 pumps just like all of the previous years. This cycle is for our Jewish friends. It's the Shemitah. It's a very interesting cycle to have a look at. It's basically the 7th year. And the 7th year was last year in 2022. So you can see we had a pretty solid down year. And throughout history, if you go back and do the lessons yourself, which I'll do in a future video, so up to you whether you want to do it for yourself or wait for me to do it, you can see that in those years, not 100% of the time, but in many of those occasions, it was a good time to not be in the market if you are long-term investing. 2022 was one of those years. Granted, the cycle does begin from the previous year in September through to the sabbatical year in September again. So it's September to September 2021 to 2022. Looking at 2022, basically September here to September, which was almost the exact low, was a great time to be out of the market if you're a long-only investor. 7 years earlier, 2015, flat year. 7 years earlier from 2015 is 2008. Absolute dumpage, carnage on the market all the way through to October. So basically you could wait for that bottom, get back into the market after the sabbatical year, taking that year off. 7 years earlier from 2008, we go to 2001. Look at that sabbatical year, absolutely destroyed. Now, before you think there's some conspiracy theories going on here and the Jews all control the markets, don't worry too much. It's not every single year 100%, but this tends to happen. So it's a very interesting cycle to pay attention to. If you want to do more research on it, go and check out Shemitah, learn about it, and apply it to the charts for your own personal trading accounts. Now I can go down a ton of these rabbit holes. There is so much interesting stuff to find out about the markets, but I'll do that in a future video. So make sure you have liked, subscribe to the channel, check out the links in the top of the video description for our free crypto and economic report, or join us as a TIA premium member. Links in the description. I'll see you guys at the next video. Have a fantastic day. Till then, peace out.